everybody now fears these things. They fear, like, around the edges, some kind of mini default. They fear total crazy inflation and a deliberate devaluation of the dollar so that we can inflate our way out of debt. I mean, these are the things that people look at. And so it's one of the interesting components of, say, even Bitcoin, not just gold, but Bitcoin, because I'm looking at Bitcoin and wow, Rob, it has held up. It has held up. And if you believed that it was just nothing, it would have actually, I think, been cut in half by now. But it's hanging in there.
Yep, and it functions in a gold-like way. It's decentralized money, and if we're moving away from a, and like Stephen Moran, Trump's chair of the Council of Economic Advisors, has talked about moving the dollar away from being the reserve currency asset, because that's really sort of core to the whole dynamic here, why we have these persistent trade deficits, because people hoard U.S. dollars and they save them instead of using them to buy our goods and services. So I think, that's a lot of what's going on here is this movement away from a dollar-centric economy. And then in the absence of a dollar-centric economy, what is the kind of the common currency of the world? It's gold, and potentially it's Bitcoin, which is gold's high-tech cousin.
Yeah, I mean, I'm looking at it right now in real time, and it's back up near 85. So you're right. And I think it's just sort of that diversification strategy. And as an individual investor, I also welcome it, just like I welcome gold in my portfolio, because it's one of those hedges, if you would. Volatility's back. I mean, we got a VIX at like 60 the other day. Now it's hanging out around, what'd you say, around 30, 31? And I've done some analysis on this. And basically when the VIX is above at least 45, you want to be in this market. 60 was great. Great is a funny way of phrasing it, perhaps. It just meant that there was a ton of volatility, which meant there may have been some buying opportunity. It's why we keep saying, if you haven't subscribed to our research newsletter, please make sure you do. Rob and I are all over this volatility, and we have some ideas on how you can invest around it. But volatility is back. It's here to stay. There's opportunities that come along, and you want to be able to take advantage, provided you have the liquidity and the cash on the sidelines to be able to do it. What do you make of this volatility? Do you think it's going to stay with us? I mean, I would say, hey, at least for the next 90 days, vol is back in.
Yeah. So to put it in context, I think the VIX is normally like at least over the last 5 years in the 20 to 25 range. And just so everyone understands what the VIX is, I mean, it's sort of like what the options markets are predicting the volatility will be in the next 30 days. So it's sort of like a forward-looking implied number. Mm-hmm. When it's 60, the options market.
It's also known as the fear index.
Yeah, and it really is. It's sort of saying this is, it's sort of like how crazy will markets be in the next 30 days. So when it's 60, very crazy. When it's 20 to 25, we're talking about kind of, normal level of craziness. I think on Friday it closed something like 35, and now it's drifting down. So I would say, markets, there have been shocks to the system. Markets are very unsettled. You've got hedge not necessarily major systemic risk, but, stories of hedge funds here and there needing to liquidate and force selling. So it's very sloppy, disorderly, kind of dislocated market conditions. And so long as, that's kind of reverberating, volatility should be high. But hopefully, the VIX will come down and, stocks will drift up and interest rates will sort of go back to their earlier position. And I think really the key is evidence. The market is just looking for evidence that Trump is continuing to, not want to create a world where there are really high tariffs being applied to foreign trade. Any evidence that this was really about a negotiating position and we're looking to get good trade deals, as opposed to actually collecting tariffs, which I think was kind of more the Peter Navarro dream, where you collect $700 billion a year of tariffs and you move away from an income tax system. That's the economic policy that would be very damaging to growth.
Yeah.
And so as long as we're moving away from that.
But Peter's been contained. I said, just let him go do Fox, like all day long. Just deposit him there in the Fox green room or outside on the White House lawn. Let him talk, let him do his thing, and make sure you have Besson in the room. Again, keep in mind, this president wants nothing more than to be able to point to his GDP charts and say, look at what I did, and look at the stock market, and look at wages. I mean, he knows that the proof is in the pudding effectively. So I think that, you've got the right people talking to him by way of Scott Besson. And by the way, he was smart to pick Scott. He could have picked Howard. And, Howard's smart too. And I think when Howard realized the bond market was falling apart, he had that wake up kind of moment. As we look at Bitcoin though, TCC is a big fan of Saylor. We are as well here on this show. I've interviewed him on both 76 Research and on the Trish Regan show. And you are very, very, sort of, I would say, in admiration of what they've been able to achieve there at MSTR and also at STRK. And we've written, again, just a plug for the newsletter, guys, because this is really phenomenal research that I think is just unrivaled, and it doesn't have any biases by way of, okay, we make money if we suggest you buy MSTR or STRK or anything like that, or gold or whatever. Well, I do have a gold advertiser, forgive me, on the Trish Regan show, but that's good because you know what? I've been talking about gold forever. And it doesn't change how I feel on anything, but at least at 76 Research, you know that whatever we're recommending, it's because we honestly believe in these stocks and these sectors ourselves. So 76research.com, use code word dollar. When you look at for example, Rob, and you are in Japan, we'll talk about that in a second, especially dollar versus yen. MSTR, STRK is the dividend play on MSTR. Walk us through why you like these.
Yeah, so as you kind of just pointed out, I think, Bitcoin has passed yet another test with this recent volatility and the big drawdown in tech. I mean, Bitcoin obviously, fell through 80K, but we're recovering here. And MSTR as well. I'm not looking at where it closed at the moment, but it's had a bit of a recovery, and it's generally going to trade, in some kind of, as some multiple of its Bitcoin holdings. So in relation to, not with perfect correlation, So look, I think long term, if there's a lot of upside in Bitcoin, which per Saylor's point, like the way we get there, it's kind of like what I was saying with gold just earlier, how everyone's going to be on the margin allocating more to gold. But the thing is, gold is already a $20 to $25 trillion asset class, and Bitcoin at the moment is a sub $2 trillion asset class. So as the world allocates, to Bitcoin, it really just has a lot more room to go up. So
I'll just point out to you, because I know you have a holding in MSTR, 3.8% gain today, $311 a share. So definitely holding up pretty well through this crisis, if you want to call it a crisis. I mean, it is kind of a crisis when you get the vol at, the VIX at 60. So it's very interesting to see that. And of course, STRK is again playing off of that as, basically you're either going to get the dividend or you're going to get the stock.
Yeah, and it's traded throughout this. It's had some volatility and sensitivity to MSTR fluctuations, but it's really traded more like kind of in relation to like the preferred stock and preferred, the convertible bond market. So it's sort of more of like the fluctuations in interest rates. But I think it's been largely flat through this. And what I like about that one and why I bought it personally is you just, the value of that instrument is really based on the commitment of MSTR, of strategy, to make these dividend payments. And, it's just so massively over collateralized in terms of its Bitcoin holdings relative to its payment obligations to preferred shareholders or even convertible bond shareholders, where the interest rate is extremely low. So it's just paying out a few $100 million a year to those investors through these instruments. And it's got, tens of billions, 40, 50 billion worth of Bitcoin on the balance sheet. So, it's like sort of going up to a millionaire and saying like, are you going to pay your electric bill this month? Like, yeah, even if the millionaire's stock portfolio goes down a lot, they'll probably still, pay their bills.
Unless it went to zero, like that, worst case scenario, Bitcoin goes to zero, but then, the
like
world's probably in a pretty bad place.
Yeah, if what you're underwriting there is a catastrophic collapse in the price of Bitcoin, that's sort of like permanent. So if Bitcoin's a failure, that STRK, MSTR, these are not going to work as investments. But if you believe in Bitcoin kind of holding its value, certainly if it grows its value, a lot, it's a very attractive kind of risk reward. So that's sort of the risk. I think, you have to just in your mind say, look, do I believe in Bitcoin's long-term value proposition? Not necessarily that it's going to 13 million, but is it going to hold its value? And maybe is it going to just produce pretty good returns going forward?
I think Saylor is going to be really happy with what we're seeing right now, because again, just holding its value, not seeing it totally fall out of bed, that's important at this moment.